Anand Tandon joins us. Anand, the Indian markets are underperforming. Is this leg of underperformance real? Is it here to stay?
Well, I mean, they have outperformed for a long enough period for us to look out for a few months of underperformance. It has been the best performing market for a longish period without almost without exception. Perhaps only the US was doing better. And consequently, I think it's only time the difference in valuation has grown so high that it is only natural that any international investor will look at other markets. In India too, if you look at domestic investors, I think the level at which we are trading at requires some amount of patience from here on to justify further growth in the market, given the context of the slowdown in the earnings as well.
Gradually, this market is showing signs. I mean, the first port of call that we needed a close above 24,000, and looks like we are here or there, almost there. Will it matter you are at 9870, 9830? No. As long as you're in and around 24,000, that's okay.
1% plus minus swing is what we expect generally on an intraday basis also. So it doesn't matter, 20, 30 points of course is meaningless.
So when do you say that what is that level at which you would say that we are out of danger? 3-4 days of close above 24,000, we are...
Yeah. So I think if we have 3 days close about 24,000 mark, say a midpoint of that last range, we were at 24,000, 24,500 range broadly for the last 1 week when we saw the second leg of recovery or stabilization for the indexes. So if you are expecting a 50% of this range, 24 to 50, if we hit those levels for the Nifty in the next maybe 3, 4, 5 trading sessions, then we can expect a much more stronger short covering wave which could come across for many of the sectors, and especially the underperforming sectors. So I think another 200 points is what we expect, what we want for the index to try and break past about the first level of immediate bearishness. And then is where we gradually believe that there could be a wave of short covering, then there could be sectors and stocks which could start to outperform, as well as you might see some long built up as well as delivery based buying which could happen to these names.
Anand, have you started shopping in this market, or we still are a distance away from the word value?
Well, if you look at how far it has fallen at the index level, we are down about 8-9%. If you look at where the earnings are, we are probably going to see a downgrade of 3-4%. So you have only seen underperformance vis-a-vis the index of only about 3 or 4%. In a context where the market, which is if you remove the commodity players from the market, most of the stocks are trading at 50 PE. So a growth rate which is really pathetic in terms of single-digit growth for most of the companies, or mild early teen growth. You're looking at 40-50 PE. I think there is some more scope for the market to correct before you can start really looking out for stocks to buy.
Sony, anything which is popping up on today's recovery? We are up about 180, 190 points from the day's low, and if this trend continues, we may just close above 24,000. Anything where you are spotting a trade?
So, I mean, I think the only...
Just go to Sony. I'm coming back to you, Anand, right after this.
Sure.
Yes, Sony.
Would be in Federal Bank, which has actually seen a new all-time high today, and it has been sustaining quite strongly above 200 level. There's a lot of put writing that has happened around 200, so one can actually buy Federal Bank at current levels, and on any small decline up to 204, keep a stop loss of 200 and look for higher targets of 215 to 218. So I think this particular stock, which has held on to its support even in today's choppy markets, I think this certainly is showing a lot of strength for further upside.
Right, okay. That's Federal Bank currently in trade. Of course, the stock has hit a life high just today itself in an otherwise bleak market. But Anand, whenever the market does throw up that opportunity, what is it that you're keeping on your radar to buy? I mean, any color that you may have on your shopping list?
Well, clearly if you look at it sectorally, the only sector that has not done very well, more importantly, is not trading very expensive, is actually the financials, and that to the banks. So, that would be one area that you could comfortably look at, despite the fact that there is going to be a slowdown, that the quality of earnings may start to slightly deteriorate, and we've seen the best balance sheet perhaps behind us. But despite that, I think, assuming that we have a reasonable growth in the economy, the kind of deleveraged position that most of the corporates have, I would argue that is still something that you will probably be able to make some money on. And that is certainly a place where valuations are not particularly stretched.
175 points higher for the Nifty, which frankly is not wrong. Ananda, what to your mind could be the impact of US elections for Indian market per se? Could it be knee-jerk, or it could have some volatility in the near term? The swing could be more than 5%.
Well, I think it could be. I mean, see, frankly, it's very difficult to call elections, right? I mean, you don't really know what each individual thinks, and collectively, therefore, especially when the pollsters are also a little confused as to which way it will swing. My general, feedback would be that the Democrats are not good for India generally. Republicans are a little better, but we have a volatile president if the Republicans were to win. So either way, you're not you're looking like between the devil and the deep blue sea. It's not that you have too much of a choice. However, it is more likely that there will be more aggressive tariff increases, etc., in the U.S. if the Republicans were to win. And in that context, exports, etc., may begin to suffer. Of course, it will be targeted more at China and less in India. But already Trump has called out India as being one of the subsidizers and tariff cheaters, as he likes to call it. So it's going to be a little tough. More importantly, the U.S. economy itself is looking a little difficult to navigate from here. Markets are fairly stretched, and therefore I would think that you might see a kind of sell-off there as well. In which event, almost all other markets will also react in sympathy. I can't see how the argument that I'll take money out of U.S. and put it in other markets works very well when the tide is moving out. Also, if you were to look at international investors, right now the preferred place may be places like China and other emerging markets, even South Asian markets or Southeast Asian markets rather than India, given the relative valuation. So I think generally the US market may not be that positive post the election, and the effect of that for India is not likely to be very positive. I'm not going into the economics of it, saying that there will be a weakness for dollar and so on. I think all that is things which will play out over a period of time. I'm just looking at the overall sentiment. I don't see that as positive.
Okay, Anand, stay with us. In fact, we've been speaking with a whole host of experts throughout the day as to what the India-US impact is going to be, who wins the elections, and what's the chatter like. Here are a couple of sound bites.
Until last week, we saw the global markets were really pricing in a Trump trade because the betting markets were heavily tilted in favor of Trump. Now, whether that was because of one or two whales really, putting in a huge amount in favor of a Trump victory, that has obviously been something that the markets have also been considering. But having said that, the markets have been running on with a Trump trade into the last week, higher bond yields, higher US dollar as well. But we have seen a reversal over the weekend a little bit and into the Asian Open this morning as well. And that's particularly because of one of the states, Iowa, which is traditionally a very red-leaning state, that has shown that the polls are really tilting quite significantly in favor of a Harris victory. So this, and we still have 7 swing states to go. This was not even a swing state. So we have a lot of data to come in the next few days. And I think it's going to be a nail-biting week. It does seem like a Republican victory could mean a stronger dollar. You consider, the risks of trade tariffs, that is supportive of a higher dollar. You consider worsening geopolitics potentially, that's positive for a stronger dollar. And just the whole pro-growth, pro-inflation kind of policies, which means that the Fed might have to be a little bit slower on its rate cutting path than previously expected. Again, that's positive for the US dollar as well. But this is whole a very tactical story. Now, structurally speaking, I know the US could print as much US dollars as it wants to be. But the whole story around, the question around Fed's independence, the question around the US debt, how much debt will they have to issue if they were to consider, those pro-growth policies, those could mean that in the long run, we could see the reserve status of the US dollar being questioned, and that could obviously impact, the strength of the dollar there.
Mr. Trump wins, he will attempt to put a large number of very heavy tariffs. The extent to which he will succeed will depend on congressional support for that. But whatever happens, I think that the mood both of the Democrats and of Trump is protectionist. So either way, it's not a very good outcome as far as India is concerned. I think we are going to find that a number of tariff walls will come up against us. In the past, we have retaliated. which then in some sense complicates the thing even further.
Trump presidency will be mildly more positive for India. There is talk of tariffs, but again, the rhetoric during the election season and the actual action sees a very big comparison. There's a very big difference on how politicians act when they are actually in power. So those 60% tariffs and all are not going to happen. India, I think, is well served by a Republican president. The Wall Street positioning is for a Trump victory.
Maybe there will be a little bit of volatility around the election and post-elections, but I genuinely think at the moment that whoever wins, they have very limited room to create really very different policies, especially in the first quarter. So I highly doubt there will be huge changes. Actually, I think, yes, the dollar might be supported, the yields might be supported, but maybe for different reasons. Given that the US have stronger fundamentals than other, I would say, developed economies.
India has a trade surplus with the US, and the focus of Trump administration is going to be how do you reduce the trade surplus. So yes, I believe that if they go in the direction, when I say they means Trump administration goes in the direction of putting high tariffs, that is going to create some kind of a stress factor early on. But I believe there's enough maturity on both sides to find a viable solution. So geopolitically, the relationship don't get impacted.
Right, okay, let's get in some BTST trades as well while we begin to wind up for the day in a few minutes from now. Sony, let's have your ideas first.
So, I will continue with Federal Bank as one of the BTST trade. And I would like to add another STBT trade over here, which would be a sell recommendation in Astral. Now, Astral has broken down below 1800 level. It's an option chain breakdown. And further breakdown can be seen if futures break below 1730. So one can sell Astral, keeping a stop loss of 1780 and a target of 1680 to 1650 can be seen.
What about your BTST ideas?
So I'll go with the ban Info Edge. That's a chart which is looking attractive. In the morning also mentioned with a target of 7660. Stock seems to have scaled past about those levels. So I think traders could look at a fresh buy. 7880 could be a target for BTST for Info Edge. And stop loss could be kept at 7660 mark. And the second would be a ban Polycab. That's a chart which is looking attractive for a target of 6760. Stop loss at 6440.
Okay, those are some interesting ideas coming our way. In the meantime, let's just revisit what's really the market closing in with, because we're still lower by about 250 odd points. Yes, we've managed to resurrect ourselves above the 24K mark. In fact, 24,100 now for the Nifty futures and above, around that mark for the Nifty spot. But it's been TechM, it's been M&M, SBI, Dr. Reddy's, HCL Technologies, Infosys and TCS, largely technology. That's really been the flavor of the day, and that's really leading the recovery, at least sectorally. And of course, it's been out and out SBI, which has managed to contribute a fair bit to the Nifty recovery. For the broader end of the market, it's been a Dixon Technologies, it's been Naukri, it's been PNB. These are some of the stocks which have managed to hold out. But yeah, sectorally, it's really been technology all through and through. Anand, what's the take on IT now?
Right? I mean, at the end of the day, the managements have started to show that there is some uptick in terms of demand. But look at it. A decade ago, the companies were growing at perhaps twice what they're growing today, and had a valuation of probably half of what it was today. At best, what you're seeing is a base effect where we had a terrible last year, and from there the outlook is looking a little better. Longer term outlook to me remains somewhat bleak for Indian IT services business. Some of the companies are transitioning to products and, more importantly, to specific verticals where they have some expertise. But for the large part, the services business to me seems to have a runway which is looking a little shorter and a little more dangerous, because most of the business that is coming is cost outsourcing. And that cost outsourcing business to me signals that people are trying to get rid of the manpower they have in their companies. If you take what Mr. Sundar Pichai recently said, 25% of the work of programming in Google is now happening through AI. That doesn't bode too well. So I think at this stage, from a defensive point of view, it may be a place where, because it is somewhat less owned, you may find a little more protection if the market were to become weaker. But otherwise, on the upside, I don't think there is too much.
It's 24,000, let me put it this way. And 24,000, we've discussed this with Kunal. Psychologically, in terms of a number, it is important. Momentum, technically also, this is an important number, so to speak. Kunal, so assuming that this is a big volatile trade, US election will be a swing event. It could be gap up, gap down, I don't know, but it would be 2-3% here or there. Then there is the Chinese stimulus. This is a big week in terms of the event per se. And then you got local elections, 20th of November. This is a week, this is a month where you will see a lot of reaction to news. What is the best strategy? Buy out of money call or out of money put? What is a better strategy?
So I think buying a strangle in that sense could be a better strategy. Strangles, when you buy both out of the money call as well as put, and there is a limited downside because to the extent of the premium paid for both of the strikes, whether it's call as well as put combined. So I think that could be a better strategy. What could also aid to the market is the rise in volatility. So I think right now, for example, we are at a point where India VIX today I think hit 17 and a half odd levels. So if you manage to sustain even at levels of say 15 to 17 on the India VIX over the next 2-3 days, that could also be a point where the markets could probably tend to get into a volatile kind of a swing, and we could be looking at a swing which could be 2% plus minus this 24,000 mark as well in these kind of sharp event scenarios curtailed into a very short term time frame. So I think in that sense, buying a strangle could be a better strategy.
Right, okay, that's the strategy for the index right now. We're closing in, off from the day's lows definitely, but an Axis Bank, Reliance, there's been Sun Pharma, ONGC, L&T, Titan. These are names which continue to give you weakness, as does ITC, even though it did make some attempts to actually recover, but not quite. Trent, HDFC Bank as well have seen a fair amount of loss coming in. Other than banks, Kunal, some of your heavyweights like an L&T, ONGC, etc. Reliance, of course, we've discussed. Even some of the most fancied names all through this year, like a Trent, for instance. Are they giving you any buy signals, or do you think there is more selling in the stock?
So L&T is one where there is some amount of stability which has come back. So I've looked at this in a manner of the last 1,000 odd points and how the stock characteristics have changed. So for example, from the first leg from 26,000 towards 25,000 mark, L&T and Reliance were the two main large cap names which had taken a lot of beating in that sense, because the stocks had fallen down almost 8 to 10% in that first 4% correction for the index broadly. In the second leg of correction, it's Reliance which has fallen down sharply, but L&T somehow, the stock has been retaining this levels of 3480, 3500. So at one point the stock was almost at 3250 levels, but it recovered quite well, and it's now stabilizing at this 3500 mark plus minus 40-50 points for itself. So which means we could be looking at a point where the intensity of selling has been over for L&T, and now the stock is getting back into a stable territory. In these times, I think it's always very crucial to look out for those intraday dips. 1%, 2% correction for a stock like L&T, 50 points down. I think that could be a point where traders could look to buy. So that's one pocket which I would believe that could stand a chance to outperform.
Okay, closing in the market, and optically you look at the screen, red. From the day's low, significantly better. Asian markets, a rub of green. Europe market, not a bad start. 24,000, you can say that bulls have just managed to eke out some gains so that we psychologically close above 24,000. Anand, let's get closing comments from you. What would you not buy in this market despite the fall?
Most of the favorites of the recent move up. So, I would still... So while some of them have corrected, in terms of defense, PSUs and so on, I think they are still perhaps fairly expensively priced. I think what you are really now going to be betting on is not so much, for example, so far we've been seeing the market driven by luxury products, because that's where urban area has been dominant in terms of consumption. I think that's likely to change. So I would not look at urban consumption as a driver going forward. If at all consumption has to pick up, it will be rural, or more importantly, driven by government spending. So it's back to industrials and perhaps rural players like tractors, etc.
Okay, 2.5 minutes left to go before we wind up for the day. Kunal, let's just get in a strategy for the index and the Nifty Bank for tomorrow. Where do you think we're headed in for?
So I think Bank Nifty is something which traders could look at taking long positions, especially the way many of these large cap PSU as well as the private sector banking stocks have behaved. I would not take too much positions on the index on the benchmark Nifty as of now, but I think if someone is looking at an option trade over here, for example, then maybe buying 51,300 or to 15,500 call could be a better strategy.
Okay, let's begin winding up for the day. Anand, good to have you on the show. Kunal, we'll let you go on that note as well.
If you like this video, then like, share and subscribe to ET Now.